And so, with optics suggesting that a counterbalance to the US influence, how do you interpret the strategic innovations and motivations behind the gathering?
It was quite interesting to see who was attending the summit. So there was 27 countries there. I mean, obviously the normal candidates, Vladimir Putin was there, Kim Jong-un. But it was interesting to see that Narendra Modi was there, and it was also, the Prime Minister from Iran there, from Mongolia. So effectively, the whole Eastern region was present.
Welcome to the Resilient Alpha podcast, where we explore the cutting edge of global finance, geopolitics, and innovation with visionaries shaping the future. Today, we're thrilled to have Thomas Barron, a seasoned wealth management expert and director at RB Wealth Management in New Zealand. With over 2 decades of experience in financial services, Thomas has gained high net worth clients through complex market landscapes, leveraging his deep understanding of global economic trends and investment strategies. His forward-thinking approach, rooted in disciplined portfolio management and a keen eye for emerging opportunities, makes him a perfect guest to unpack the dynamic shifts that are occurring in the world today. In this episode, we will dive directly into the rapidly evolving geopolitical and economic landscape of Asia, where recent market events, like last week's high-profile summit between China, Russia, India, and North Korea, signal potential reshaping of global alliances and trade dynamics. Thomas will share his insights on how these developments impact markets, investment strategies, and the future of wealth management in a region critical to global growth. From navigating US-China tensions to assessing the implications of India's strategic balancing act, we'll explore how investors can stay resilient in an increasingly complex world. Buckle up for the in-depth discussion and lightning round that will spark new perspectives on the opportunities and challenges ahead. So with that, I would like to welcome you today.
Thank you very much. Appreciate it.
Absolutely. So first question for you, if you want to just for a second tell me a little bit about what you do, that would be really helpful.
Yeah, so originally he started the family office in 2005, and it was effectively based on a failed relationship with a bank. And then we said we can do better than the banks can do, so we started effectively our investment fund, and then just grew the business from there. And we have just got more and more sophisticated over the years, so we advise other family offices as well, especially around precious metals, which is more front of mind at the moment, and quite successful in that regard.
So first question for you. So geopolitical shifts in Asia. Last week we had Shanghai Cooperation Organization Summit in Tianjin, and that saw leaders from China, Russia, India, North Korea project unity. And so with optics suggesting that a counterbalance to the US influence, how do you interpret the strategic innovations and motivations behind the gathering, and what does it mean for the global market?
Yeah, it was quite interesting to see who was attending the summit. So there was 27 countries there. I mean, obviously the normal candidates, Vladimir Putin was there, Kim Jong-un. But it was interesting to see that Narendra Modi was there, and it was also, the Prime Minister from Iran there, from Mongolia. So effectively, the whole Eastern region was present at a military parade and also at the summit. So it definitely sent a big message as an alternate universe to the US dominance. So China is definitely stepping up the game of actually showing off a bit more. That wasn't the case in the past, but this time, if you look back 10 years ago when they had this parade or the summit, it was a much smaller event. But this time, my understanding is it was the second biggest military parade in history after the one in 1945 in Moscow at Stalin. We have 45,000 attended. So it is a big event. And I think it's a change in geopolitical events. It's a big shift.
Interesting. So you touched on my next question there, which was with China hosting the summit alongside its military parade showing this new weaponry, it seems to be almost positioning itself as a leader of an alternative global order. So how should investors view China's growing influence on Asia, particularly in light of the economic challenges and tensions within the US?
I think you have to see it a little bit bipolar. So effectively, when you invest into China, you're having a look like at Alibaba or Tencent, which are more domestic players, and effectively probably not investing too much into their exporters. But there's a lot of opportunities there for infrastructure projects. You just have to be geopolitically focused, have to have a certain degree of diversification. Yeah, we just have to be careful of what's happening now. It looks like to me at the moment that the two nations, the US and China, are a little bit on an escalation path. You know, Donald Trump saying now the Department of Defense, we call it Department of War. I don't really think that's helping a lot. But if you look at the gold price development over the last 10 days, it appears that during the military parade and the speeches of Putin and Xi, that people felt this is escalating, and that's why the gold price shot up $100 from $3,500 to $3,600.
Interesting. And so if we actually shift gears a little bit to India, so Narendra Modi's participation in the summit, that was his first visit to China since 2020. And that signals a thaw in India-China relations, despite ongoing border disputes. So how do you see India balancing its relationship with China, Russia, and the US? And what opportunities or risks does this present to investors?
I mean, India exports $87 billion to the US. So the US is a big market for them. You probably have to see it slightly more balanced. You know, you have normally in the US, your average hourly rate is say $36. In India, it's like $2-3. So even if you put 50% tariffs on them, it probably wouldn't damage their export to the US too much. So I don't really think. But they do care, but yeah. But I don't really think they can do much, or they won't be doing too much about it either. But what it did show is that Modi, you know, I was actually quite impressed not impressed, I was stunned a bit, you know, when Modi walked in with Putin hand in hand, effectively, to meet Xi, that was a big message. So from that perspective, the US might have to be a little bit more careful of how they manage that relationship.
And so the deepening ties between Russia and North Korea, including North Korea's troop deployments to support Russia in Ukraine, have raised concerns about a new Northern Triangle. So how might this affect stability in Northeast Asia? And what do you think investors should look for?
North Korea, I mean, they provide them with manpower and ammunition, and Russia provides them with missiles and spacecrafts and stuff like that. So, but in general, you have to see how, from a GDP perspective, how big North Korea is. You know, North Korea, they have like 30 billion GDP. And then South Korea has 1.7 trillion. So South Korea as an economy is like 58 times bigger than North Korea. So I think we're overvaluing that position a little bit with a threat from North Korea. I think that he's a nice to have for Putin to support his war and for China as well. But I don't really think there's a big threat from North Korea as such.
Interesting. So U.S. tariffs under the Trump administration pushed countries like India closer to China and Russia. while also disrupting global trade patterns. So from a wealth management perspective, how can investors adapt to these trade wars and shifting alliances?
Yeah, I mean, you can still invest in the individual countries. I mean, from my perspective, India has a very young population from a demographic perspective. So you have the average age in India is 29, 40% is younger than 25. So you have a very long runway of a middle class to grow, from amount of the middle class themselves and from a degree of income development. So I think India has a very long runway to grow, and you have 1.5 billion people, So I think we can expect, or there will be a lot of growth there in India.
So geopolitical tensions like those between the US and China are driving companies to rethink supply chains through friendshoring and nearshoring. So how can investors identify opportunities in this restructuring, particularly in Asia's emerging economies?
Yeah, I mean, we look like a lot at domestic companies or, cloud services, e-commerce. Some of the companies are across the whole region, but it's more around the Asia region, not globally. So we look at that. We look a lot at mining and probably mining companies which are not in the known conflict areas. So we have a lot of miners in Canada, Australia, and South Africa. So all those companies would be outside known conflict areas, and they wouldn't be impacted too much by kinetic conflict. Yeah.
And then with China's economic slowdown, India's growth trajectory, and the ASEAN's rising prominence, where do you see the best investment opportunities in Asia over the next decade? And how should portfolios be positioned to capitalize on these trends?
Yeah, so if you don't have a deep knowledge of individual markets, I prefer going with ETFs. Nifty 50, or there are some good ETFs in China as well. If you a little bit more in an umbrella view, so India would be for us a top spot. Then Vietnam looks very aggressive and growing fast. I mean, we're looking at like Vietnam overtaking Thailand in 2029, overtaking Australia in 2030. So the growth trajectory in Vietnam looks quite promising. So I would look, Vietnam, Philippines, India is probably our biggest concentration.
Excellent. And so given the volatility introduced by geopolitical events such as China's military posturing over Taiwan or North Korea's nuclear ambitions, how do you advise clients to build resilient portfolios that can withhold these uncertainties?
Biggest risk from our perspective in this volatile world is going forward. At the moment, I think China is following the Ukraine war quite closely. So they checking out what do the Russians well, what do they don't well, where can they improve, and looking at their weapons exposed or shown off at the military parade. I think they definitely might have a look at Taiwan at some stage. I think people get a little bit too worried about that there will be a full kinetic conflict with Taiwan. My thought be it will be less aggressive, but it could be as well as disruptive. So we could think either at some surgical strikes at some very important manufacturing plants, like TSMC, they have around 15 manufacturing sites in Taiwan. So if you would attack them surgically, that would bring the chip production to its knees, and that wouldn't be helpful for the US as well. Or alternatively, they just do an air and sea blockade and slow the exchange of goods down. So that's something you have to think a little bit about it. Yeah.
So that's all the main questions I have for you. We're going to take a break and come back for the lightning round. Great. So one question we have is, what makes you an expert in some of the things that we've been talking about today? Because it's a big topic, and I would love for you to be able to tell our readers why we brought you on board to talk to this.
I think living in Australia and New Zealand, you have a different view of the world because you get different information. And in my younger years, I was studying sinology for a couple of semesters. And I have a friend in Hong Kong, and I was visiting Shanghai regularly. So I have some background information. And in my network, people are in China and stuff. So they give me some feedback sometimes, and that gives me a good understanding of geopolitically where we are.
Yeah, I'm guessing from your perspective, just even where you're located, you get a much different view than those of us sitting here in New York would get to the world. For our lightning round, I have a few quick questions for you. So, bullish or bearish on China's growth in the next 5 years?
So China has had a similar crisis as the US in 2008 with their real estate. So I think we have seen the bottom of the real estate crisis, or we pretty much there. So I think we're coming out on the other end of the real estate crisis. Chinese consumers have always been good savers, and I think we will see more consumption in the next 5 years. So I'm definitely bullish, whereby at a slower trajectory, slower than Vietnam and India. Yeah.
And is India the next big investment frontier in Asia?
I think India, from a demographic perspective, you have 50% or 40% of the people are under 25. The average population is 29. So you have 1.5 million people which are averaging 29. So you have a very long runway to grow that economy, internally. So I'm very, very excited about India.
Interesting. And so is Russia's pivot to Asia a game changer, or do you feel that's a desperate move?
It's a bit of both because, Russia's war with the Ukraine lives and dies with the revenue out of their oil and gas facilities. So, if the US or Europe would have been aggressive 2 or 3 years back and would have bombed those gas and oil facilities, it would have stopped the revenue flow for Russia. And I think that war would have died within 3 months, because without the revenue, they wouldn't be able to keep that up. So and then pivoting to Russia, to China and India, obviously provides China with the energy they need on the gas and the oil side. I mean, you have to probably add Iran to it. Iran, they have now a train track from Tehran to Xi'an. So effectively, even if they would close down the Strait of Hormuz, China would still get their oil from Iran without any interruption, but it would hurt the West quite a lot. So, yeah, it's quite dynamic, but it's definitely, without India and China, Russia could not have this war.
Interesting. And so how much should investors worry about North Korea's growing ties with Russia and China?
Like I said before, it's a very small economy. They do produce ammunition for the Russians and some manpower, which supposedly is only on the Russian side, so they're not actively engaging in the war. But in saying that, I'm not too worried about it. I'm more worried about Taiwan.
So are Trump's tariffs a short-term disruption or a long-term shift for global markets?
It's a very good question. If the tariffs are upheld by the Supreme Court, it would be a long-term shift. But like I said, we have to keep the tariffs in perspective of what the average wages are in certain countries. Because if your average wage in the US is $36, I'm just putting a number out there, and your average wage in India is $2, you never will be able to reshore a product like shoes or fabrics or clothes, to the US because it just would be too expensive. I mean, we can see some of it that AI will try to save costs, like in call centers. So if you look at India or the Philippines, from their perspective, they are probably a little bit worried about their employees at the call centers at the moment because they will be replaced by AI agents, which is obviously then quite cheap. But if you can't, from a production perspective, you can't replace everybody with a humanoid. So there will be still a lot of manual work, and that probably cannot be reshored. So at some extent, it's probably more that there is a revenue generation for the US than a reshoring exercise.
And so which Asian country right now is the most promising for investors?
It really depends. But like I said, you have Indonesia, Malaysia, Cambodia, Vietnam, India. So those are the fast growing Asian economies, and that's where the opportunities are.
And with Asia leading in digital trade growth, is this a sector to overweight in portfolios?
You have to be careful because I think even in the data center area, there's already, or cloud services area, there's already some overinvestment. So I wouldn't probably overweight on the digital or in that digital space too much, but in general, I would probably have 40 to 50% of the portfolio in Asia Pacific. Yeah, not necessarily the digital space, but everything which is solid companies with good balance sheets and good free cash flow and growing.
What's the biggest geopolitical risk in Asia that investors are underestimating right now?
Yeah, for us, there's two things we concerned about. That would be Taiwan, that China would instigate a surgical strike or have a air and sea blockage. And the other thing is really, if you look at China and how many educated engineers they have, and I think personally, there's a lot of investment in AI, but I think the next disruption will probably come from quantum computing or organoid intelligence. I think that could change the game quite a lot. And then, it could be a risk to that whole AI theme.
And which Asian currency do you see as the strongest bet for the next year?
Oh, that's a good question. We do think the Japanese yen probably has seen a bottom, so I think they could come back up again. We also would think the Philippine peso and the Singaporean dollar could stay steady or get stronger against the US dollar. I mean, the Vietnamese dong, I would think it should appreciate, but because it's pegged to the US dollar, I don't really think it would be moving too much, but I think they might have to revalue it further down the track.
So will Asia's AI boom, so China's AI chip advancements, will that outpace the West?
I mean, if you look at the car manufacturing example, 20, 30 years ago, every European car manufacturer, every US car manufacturer went to China and put plants up there. And then obviously China started copying it and actually improving some of their products. I mean, if you look at BYD, I mean, some of their product looks pretty sleek. And I think with the chip advancements, I mean, Huawei is starting a new plant in China. I think give them 18 months, 3 years, maybe 5 years max, but then I think they're there.
So with Russia's gas deals with China, is energy a safe bet in Asia right now?
Yeah, just during the SEO summit, they actually met with Mongolia, Russia, and China. And I think that Siberia 2 gas pipeline is going to happen. So I think it will make China more independent and Russia probably more dependent. But it could be a risk from a West perspective, that China is effectively completely independent. And that's what they're working towards here.
And how likely is a Chinese move on Taiwan within, say, the next 5 years? And how would investors prepare for that if that's the case?
Yeah, that's a very good question, because when we talk to people in China, some of them are actually a little bit more aggressive, and they're all talking openly about it, which worries us a little bit at times. But, if they just have an air and sea blockade, that by itself would be quite a problem already for the US economy, just from a chip perspective. So let's see how you can prepare your portfolios for it. Yeah, I do think you just have to monitor the geopolitical situation quite closely. Like I said, what happens at the moment is kind of tit for tat, and this kind of escalation, we should shy away from that. Yeah.
And so in a volatile Asia, which is a better safe haven for wealth preservation? Crypto or gold?
Good question. The thing is with crypto, and especially with Bitcoin, I was a little bit deflated, or I was actually surprised to the downside that, Bitcoin went to 125,000, then it dropped to 108,000. So that's a big drop, that's like 10%. So that's not seasonally. Normally seasonally, August would be flat, and it actually dropped 10%. So for me, it looks more like it's very liquidity driven. What the Fed is doing at the moment, they're beefing up their TGA account. So they go from 400 billion to 800 billion over a 2 months period. So it's the Treasury General account. And what they do is effectively they're selling bonds and beefing up their TGA account. That means you're absorbing 400 billion of liquidity out of the market. And I think Bitcoin took that negatively. So I'm definitely, and then looking at gold was stable and then shot up. So I definitely would lean to gold.
And how will Asia's environmental challenges, like the Yarling Zangbo dam dispute, affect investment decisions?
That's a good question. I mean, the thing is, I think India and Bangladesh are at the, in the area of concern, because, I mean, if their water disruption is too long, that would have an impact on their water supply. But I think China wants to manage it amicably. I don't really think they want to disrupt the water supply to India or Bangladesh necessarily. So I think they will manage that carefully. I'm not too worried about it, because if you saw the meetings between Modi and Xi, it was very friendly. So I think they will manage that amicably.
And then in terms of portfolio allocation, what percentage of a portfolio should be allocated to Asia-focused assets?
So Asia, including the APEC region, I probably would say 40-50%. That's where we are roughly. And then obviously in the said mining sectors, we have like 20-25% away from the conflict known areas. And that should set us up reasonably well for any disruptions. Yeah.
Excellent. Well, I wanted to thank you today. My last question is just, where can people find you if they want to reach out?
So you can find me on my website, rbewealth.co.nz. And my name is Thomas Barron. You can look me up on LinkedIn. And you can just ping me and you can talk.
Excellent. Well, I hope to see you at IvyFON later this week for our conference. And I just want to thank you again. It's been a pleasure interviewing you today.
Okay, sounds great. Thanks so much.
You.
Thank you.